Is getting a refund even possible when you're 100% self-employed, or even if you are a single member LLC? The answer is yes. The only thing is the calculations are slightly different and the maximum amount changes. If you're curious to see how, no worries, I got you. Welcome to part 2 of how to get the maximum refund, but for this one, I'll add when you're self-employed. Let's go. What is going on, family? It's your favorite uncle cousin, Tyrone Gregory here, back again to talk about how to get the maximum refunds, except for this time I'm going to show you how you do it when you are 100% self-employed. So in part 1, I showed you what would be required to get a huge refund. The only thing that in that video, the income that was used to arrive at a huge refund was from a regular job. Well, when you are self-employed, you still can get a huge refund, but you will need to calculate your income a little differently. And in this video, I'm going to show you how. In the first video, we talked about how there are technically only 3 ways to get a refund: through withholding, refundable credits, or a combination of them both. Well, when you are self-employed, there is no withholding. So we're going to replace the withholding with quarterly estimated payments. So if you pay more quarterly estimated payments than you should have, you're going to get the overage back as a refund. And everything else is the same exact in this video as it was in part 1. The refundable credits are still the same, and so are the amounts and qualifications. However, when it comes to the self-employed and the single member LLCs, there is one refundable credit that is calculated slightly differently, which in turn changes the way we determine the amount of credit. And that one is the earned income tax credit. You see, normally you would just use the income you earned from your W-2 to determine the amount of credit, like showed you in part 1. But when you are self-employed, the amount used to determine the credit is calculated differently. And let me show you what I mean. First, to arrive at the income needed, both the self-employed and the single member LLC needs to file a Schedule C. And the Schedule C is going to be broken down into 2 sections. The first section is going to become the income section, and the second is the expense section. And the reason this is important is because the starting point to determine the income is not the gross amount of money made, but the amount after the expenses are deducted, which is the net profit. Next thing we'll need to do is to determine the self-employment tax. And this is an important step, and you're going to see why a little bit later. So to determine the self-employment tax, let's look at the formula. So the formula for determining the self-employment tax is this. First, you take your net profit and you're going to multiply that by 0.9235. And then you're going to get a result. You then take the result and you multiply that by 0.153. And based on that, you're going to get your self-employment tax. Easy stuff, promise you. Okay, so now that we know the net profits and the self-employment tax amount, we can now determine the amount of the earned income credit. And truthfully speaking, if after you've done the math and you still end up in that income range, the credit amount is going to be the same. But let's still look at the formula. And again, it's quite simple, really. Okay, so here is the formula that we're going to need to use to determine the income that will be used in the determination of the earned income credit. We've already figured out our self-employment tax. So we're going to take that amount and multiply it by 0.5. And that, of course, is going to give us a result. Once we get the result, we're then going to subtract that result from our net profits. And what we get from that is going to be the income that we're going to use for the EIC purposes. And now you can see how that's slightly different when you're self-employed. Because one, we started off with our gross income, subtracted our expenses, determined our net profit, and from our net profit, we then determined our self-employment tax, had to go through and subtract the self-employment tax from the net profits, and that was the income that we used to determine the earned income credit. And again, if that number falls within the range, then that's how you're going to get the maximum amount. So now that we know how everything works, let's look at a few scenarios. We'll use the same ones from part one so we can see what changes happen when you are self-employed. So here we are, scenario one, single, one dependent, 100% self-employed. We went through all the formulas and we've arrived with self-employment income being in that perfect range, $19,500, right? They'll still get the standard deduction of $18,800. However, one thing to note here, the taxable income went down to zero. A lot of calculations that went on behind the scenes, but let me explain to you what happened. When you are self-employed, you get to deduct half of the self-employment tax. Remember we had that 0.5? Well, that's because half of the self-employment tax is deductible. It reduces the income. So half of the self-employment tax of $19,500 brought that amount down to under $18,800. And since $18,800 was the standard deduction, it zeroed out our income. So we have zero taxable income. And that's how we arrived at that. And because we have zero taxable income, well, guess what? We have zero tax. There's nothing to tax, so zero tax. And because there was zero tax, there was zero child tax credit, all right? And of course, because everything zeroed out, our total tax was zero. But this is where things get interesting. We still have self-employment tax that we have to consider. If you notice, the self-employment tax came after we've already figured out our total tax. So based on $19,500, the self-employment tax is $2,755. That does not get ate up by the child tax credit, as we can see here. So we still have to account for that. That is the main key difference when you are self-employed. So we still get the max of the earned income credit, $3,618. We still get the additional child tax credit of $1,400. And we still get to max out on our dependent care benefits of $4,000. But look what happens. The refund is now reduced by the amount of the self-employment tax. In the previous example, I think this was close to $8,000 and some change, or maybe even $9,000 and some change. But we have to subtract the self-employment tax, okay? That's the main difference when you are self-employed, is that pesky self-employment tax. Let's look at the second scenario. Everything is the same, right? We still got the 19.5 standard deduction, 0, 0, 0 here, 0 there. Again, we still have that pesky self-employment tax. The EIC is still at the maximum amount. The additional child tax credit is still at the maximum amount. And so is the dependent care benefits for child care, putting our possible refund at $14,000. So again, in the previous scenario in part one, that was closer to 16. And again, we can look at the same thing in scenario three, as you can kind of figure out everything is going to be the same, right? Everything is zero. There's that self-employment tax again. EIC still maxed out. Additional child tax credit still maxed out. Dependent care benefits still maxed out, but now we have less of a refund. So as we can see, the only thing that really changed is the fact that the self-employment tax is a tax that is not reduced by the child tax credit, so is not reduced, and therefore we have to subtract it from the other refundable credits. And the conundrum that we face here is that in order to reduce the self-employment tax, we would have to reduce the income, which would also reduce the earned income credit. So then we still end up with less of a refund. And again, please note that these scenarios presented here were just for example purposes. Everyone's situation is different. And if you think you may fall into one of these scenarios, I highly encourage you to speak to your tax professional to see how your specific situation may play out. All right, fam. That's how you can get a huge refund when you are self-employed. As always, make sure that you hit that subscribe button, give it a thumbs up, hit that bell notification so you'll be notified when I drop the next video. And until the next time, fam, know that I love you and I will see you in the next one.
Perfect.